Okay, guys, so welcome to another very special episode. For this one, I'm very excited talking today with Jens Nielsen. He's a real estate investor originally from Denmark, where he worked various jobs at a young age. In 1994, he was offered a job in London, decided to take a leap to explore the world, and he got quickly transferred to the United States. As you see the flag behind me, I would love to be there. I would love to exchange the positions anytime. So great country where he lives in there since 1996. So very long time. So after a successful career in telecommunications and IT, Jens shifted his focus from being an employee to becoming an entrepreneur. Multifamily real estate investing seemed the obvious choice, which it is for the most of the people who are watching this. So he by providing many benefits. So in 2016, he started investing and is currently the owner of 78 apartment units and mobile home lots in New Mexico and Colorado. So after the success as a KP, Jens has a co-sponsored multifamily syndications specializing in underwriting, due diligence, capital raising, and investor relations. In 2019, Jens raised $1.5 million for 3 deals totaling over 650 units. So, and again, the bio just continues. It's a great one. I'm going to put a full version for you guys who are watching this interview. You can read it through. It's some great, very interesting stats and, the story. So first of all, I just want to say a big thank you, Jens, for being today on the show. And I know you're going to bring a ton of value for the people who are watching. So thank you very much.
Hey, thanks, Martinez. I appreciate the opportunity to come on today. It's awesome to connect with people throughout the world and stuff. Just because I'm in the U.S. doesn't mean that's the only place where you can invest in real estate. So
yes,
it's great to connect. So.
Exactly. That's a good point. So again, for the people who are brand new to you, again, maybe they didn't see you yet until this interview. So maybe you can just tell your story a little bit. Like, how did you moved from, because again, there was a lot of big moves, like from Denmark to London, from London to US, and then being an employee and having right now this successful real estate business. So maybe you can take us throughout the journey.
Yeah, so 1994, right? I mean, you can see I have a little gray hair, so I'm probably a few years older than you are, right? But I was young and I was living in Denmark, and I suddenly just got this opportunity to work I was in telecommunication back then. I got an opportunity to go to the UK, to London, and work in the telecom industry there. It's like super exciting experience to just move to I was in Copenhagen before, but to move to a big city, to just go out there and explore the world and just take some chances that maybe I wouldn't otherwise have done hadn't that opportunity come through, right? And I think sometimes we just gotta grab onto something that comes our way. It may be scary, it may be unusual, it may not be comfortable, but if we go through move through that being uncomfortable for a while, we have that amazing life on the other side. So that was kind of like that already started there, 26 years ago, I guess. Mm-hmm. So I was in London for a while, and this was an American company I was working for, and they transferred me. Well, they offered me the opportunity to come to the U.S. and said, hey, we'll sponsor you, we'll get your visa and everything else. And so there in 1996, I moved to Maryland, on the East Coast of the U.S., close to Washington, D.C., and that was a whole other world that kind of opened up to me, because I've traveled here a couple times, but nothing major. So that was like, hey, I got the opportunity to come to the U.S., and that really opened a whole set of just a bunch of new opportunities, because I came from Denmark, and it's entrepreneurship and stuff like that, and this opportunity is a little bit different than what you have here. So I got that job, and I started really traveling a lot throughout the world. I've been like almost all through Southeast Asia, through Europe, through South America, doing that job. Super exciting. But also one day I realized, hey, this is a good job. But what I hadn't done before I left Denmark, I'd never actually gone to college. I had like a vocational education. So my boss was one of the most influential people early on in my career. Was, you got to go and get a degree. You got to get, just get that schooling so you have the paperwork. maybe some people will contest that now because how expensive it's gotten to go to college, but at least back then, 20 years ago, it was fairly affordable. So, got my degree, did everything I was supposed to do, master's degree and everything. And just kind of, just continue to work and save my money and do what you're supposed to do, right? That's kind of the model that we all taught early on in the US or in most European countries too. Like, get a job, work, save in your retirement accounts, and that's what you're supposed to do to be a good citizen. So that was kind of the whole start, right? And it wasn't until a few years ago that mindset started changing a little bit.
Mm-hmm. Yeah, definitely agree. And there's more and more, like in the States, I mean, it's a capitalistic, country, I would say. So I don't know, like you live in there, but people like I heard everybody saying it's a capitalistic mindset. And again, that's why I have the flag. It's because it just reminds me those two things that you mentioned. First of all, it's the freedom. It's again, the freedom of choice. That's what I'm talking about, maybe more specific. And the second thing is opportunity. So like to be successful in anything in life, I think you need those two things, like freedom of choice. It's very important. And first of all, you have to have an opportunities to have a freedom of choice. And
Yeah.
that's what the States provides. So what do you think, like, I mean, having this journey and just continuing, I mean, having, 78 apartment units currently, I'm sure you have a big goals, in front of you, which we're going to discuss as well. But what tips you will give for the people who are maybe looking to get involved into multifamily syndication at some point, in their future? Like, what is the stepping stones like towards this business?
Yeah. So, I mean, maybe back up a little bit because, I had for several years this idea. It's like, okay, why do I keep working for somebody else, right? Because I kept, every time I wanted more money, if I wanted better opportunities, I would go and find a new job. I was always relying on somebody else to give me more money, to give me a better opportunity. I never really had that mindset of saying, I got to go and create my own success, my own, build my own dreams. And every time I thought of something, it was like, well, I could be an IT consultant or something. That's just another job, right? It was never really that financial freedom that I think a lot of people are really, well, which my goal is now, right? So a few years, maybe 4 or 5 years ago, I was like, man, I got to do something. And I just started studying all these different opportunities. I was like, hey, real estate, multifamily real estate, no question asked, that is the way to go, right? Because, you buy something, you improve it, you improve the value, you use, the bank's money, you use your investors' money, and you have your tenants pay down your debt. There's just so many advantages to multifamily real estate investing. I was like, man, that's the way I got to go, right?
Mm-hmm.
So it took a little while to get that, change was between my ears to kind of just think about how can I rely on my own skills, my own abilities to create something versus working on somebody else's dream. So that was the big mindset shift, really, that 4 or 5 years ago. And then, I'm a very goal-oriented person, and I really want to learn. Once I decide something, I'm just going to start reading books. And you got a stack behind you there, my bookshelf, you can't see it here, but there's a ton of books, right? So I really just started, so really, if you want to get into this business, you got to learn as much as you can, right? So I would listen to podcasts like your own. I would, read books around real estate investing. I would go to conferences. And then I also started getting educated. So I started joining like a mastermind / coaching group, because real estate investing is not difficult, but there's some very key things you need to understand so you don't get yourself into trouble, right? So that's we want to make money, but we also want to play it sort of safe, right? Because if you make a big mistake, that could knock you out of the game.
Definitely. I mean, everybody, like time and time again, like everybody that I have on the show, every successful real estate investor is going to tell you guys who are watching, like you hear the same theme all over again. It's like the mindset and, importance of educating yourself, getting that education, as you mentioned, throughout the books, mentorship, seminars, events, meetups. I mean, there's so many ways, like podcasts. There's so many ways right now that you can get all these free content before you go and maybe get a 6-figure mentor, that you can like podcast, YouTube content. I mean, there's so much information, like bigger pockets, blog posts. I mean, you name it. There's like hundreds of thousands, probably, content pieces floating around. Of course, you have to find the right people that you want to follow, definitely. So you know, make sure that you do the due diligence, you know, when you do that. Yeah, but mindset is clearly super important. What about the timing? You know, because I ask this question fairly often now, you know, my guests, and I like you know, like everybody's talking about upcoming market crash, and you know, again, nobody has the crystal ball to tell when it's going to happen. But for the brand new people who are looking to get involved into the business, either actively or passively, doesn't matter. Because again, if you're active, you know, again, like if you're having a full-time job, like you don't know what's going to happen with your industry. And if you're going to have a job, if you're going to start a business, there's kind of, you know, there's scarcity there. If you're a passive investor, again, you have a business and maybe you just want to keep the cash for you. You want to keep the equity, you know, in the business, or, you know, just the cash in the bank, and you're not going to be looking to be investing. So, and those kind of people, you know, what do you recommend? So invest right now before it happens, or just wait it out and just start investing in the bottom?
Yeah, so I have always been, you know, everybody's been talking about this crash for years.
A long
right?
time, yeah.
And if you've been sitting on the sideline for the last several years, you've lost a lot of opportunity there.
Yep.
So I have been of the mindset that, hey, continue to invest, but just be cautious, be you know, conservative in your underwriting. Don't assume that rents are going to continue to go up. Like we've seen some cities here where rents have been going up 5 or 6%. Don't assume that that's going to continue. Underwriting said, hey, we're going to just say it's 2% rent increase, which is kind of, you know, follow inflation. And just be, you know, look at who are you investing with, you know, what markets are they in, what's the fundamentals of that market, what's the property like? Are you buying like a heavy value add where you're really relying on a lot of upside for the thing to work out? Or are you buying something more stable that's like, hey, if it just even operates the way it's operating now, we'll still make money on it, and any upside is bonus, right? So that's kind of the, you know, and also your debt, is your debt long enough so you know, so you don't have to sell it in a few years if the market is kind of in the tanks a little bit. So those are some of the things we do. And also it's interesting, if you look back, you know, 2008, 9, 10, which was obviously the one thing that's on most people's minds, the delinquency of large multifamily, you know, large, you know, 100 plus units was like 0.5% or something. It was very, very low. Yeah. You know, if you have good agency debt, good underwriting, your risk is very small. I know a lot of people got crushed in like single family and small multifamily and everything else because they didn't really know what they were doing. But large multifamily, by all means, did really, really well during that crash last time, right? So, and there's a huge demand for affordable housing, for workforce housing, you know, that class C+, B-. This is kind of what we focus on. So I don't know, that's what I'm saying. You know, if I have a crystal ball and I could tell you what's going to happen, but I still feel like you can't just wait for this crash, because, and then especially if things are going, everybody's then scared of investing too, right? Yeah. Your mindset is going to be, oh, I don't want to put money into the market right now because everything is in the dumps, right? So
yeah. Yeah, thank you for that. Thank you that you cleared this out. And guys, you heard time and time again, it's almost the same advice that all these people are giving, just like Jens did. They're saying just go and do it right now. I mean, you know, there's never, you know, a good time to go and invest. So why you just, you know, educate yourself and start doing right now. So yeah. Maybe we can expand a little bit about underwriting, because I know you specialize in it. So again, just like, maybe you can cover what's going on in the market, again, with baby boomers moving south, like all of that situation. And when it comes to underwriting, maybe like what deals are you looking for, markets, sub-markets, and your deals, type of classes, and why those exactly?
Yeah, so I mean, you know, there's a bit of a demographic shift, right? As people are retiring, they're getting to their 60s and retiring. And they, you know, there's been a bit of a, you know, a flow to the south, right? Especially from like New York or New York State, or some of those less, you know, even California people are moving out because the taxes are going kind of high there. So there's that. There's also, you know, the millennials that got stuck with huge with huge student loan debt. A lot of people have a lot of debt, and that it's really a drag on their ability to go out and buy that first house. And so you've seen that demographic tend to rent longer and tend to want certain amenities and so forth, right? So that's driving some demand too. And also, unfortunately, you have that working class, the people that work at the Walmart, McDonald's, or whatever, just can't, they can't go out and save up that money for that house or whatever. So they are stuck renting, that renter by necessity. They're stuck doing that, which it's not good for the country, overall. But if you have that product, if you have that working class workforce housing, then you have a steady pool of customers, if you will. Right? So that's kind of what we've been seeing.
Awesome. It's not good for the banks. That's what it's not good for, because the banks, right. They're not getting money if there are people not taking on mortgages and not buying houses. But it's becoming a renter's nation for sure, because I heard that many times, people saying like people are more looking towards renting instead of buying, because it just makes sense, because people, again, coming back to the freedom thing. Like, people want that. Like, they don't want the headaches for 30 years paying the mortgages down. And it's like, you have to the story, like mow the grass and like take care of the roof and like all of those, like it's boring. So when it comes down to the due diligence, again, the second thing that you do, maybe you can, tell people again, because I think, from people like myself, because I told that to all the guests, look, I'm not looking to be active, like, probably never, because like, I had one of the guests on his show, and they own they own a lot of real estate, like assets under management. Currently, they're going to hit $1 billion this year. Wow. So, and I said, look, and he's been passive all the entire time. And I was like, look, it makes sense, so again, and all I'm asking all these questions because I think, passive investors, some of those are like very sophisticated and they want to just know these questions. So it's not even just for the audience who are looking to get involved into real estate. It's for me as well. I'm just curious to find these things out. So for the due diligence process, maybe you can take us through and explain like what the things are you're looking for and like the ways you're increasing the value for the properties. Like what's the steps in that process?
Yeah, so we get an offering memorandum from a broker, right? We always look at what's the trailing 12, the T12. What has the property been doing, right? Income, expenses. We kind of look at, hey, what's the income current relating compared to what the market should be doing. Let's say they're renting for $800, but similar properties in the neighborhoods are renting for $1,000. Well, we can see there's some upside there, right? We kind of look at that. And we also look at the expenses. Are the expenses reasonable for that type of property? We typically want to see, 45 to 50% expense ratio. That's pretty common. So sometimes if you see something that's running at 70% expenses, I've seen that, and you're like, okay, what's going on here, right? Is the owner funneling other expenses through their business, like their car and their house and their vacation? Sometimes you see that, or sometimes you see really, really low expenses. Like, can I really go in and do this? Can I run that property in the same way? So you can very quickly go through all of the line items and then kind of normalize them and see, so things you can't control, like your taxes and your utilities kind of are what they are, right? Your management, your repairs. You get a good feel for how's this property running, and you see, okay, if I go and buy it today, is it even going to cash flow, right? Is there any returns on the price? And then you look, you don't want to go and pay for what the property can do. You want to have at least it should do okay right now. And then any upside is what you can earn. That's the risk you're taking on, right? Right now, you're seeing a lot of deals that are selling, on a pro forma basis. Said, oh yeah, if you do all this stuff, it will make, be a 6 or 7 cap. But that's like, okay, I got to put $1 million into it or $2 million, and then I may make this kind of money in a couple of years. That's a lot of risk there. So you have to kind of find that. I don't like to take on all that risk, because you have to really do all that work to make it happen. But now you're also not going to go and find that 8 cap deal anywhere a 7 or 6, it's going to be, so it's always trying to find that balance. So, I mean, we are on a contract right now to do, it's 127 units. And we looked at it, we said, okay, if we just go and buy it the way it is, it actually does pretty well, 6-7% cash on cash return. We just do that, operate it as it is, no problem. It wouldn't be a great deal, but also wouldn't be a bad deal. We said, okay, so that's kind of step one. Then we said, okay, what if we go in and spend about $5,000 per door? What can we do with this property? And we realized, okay, we looked at neighboring properties and we can raise the rents by about $100 to $130 over the next couple of years by putting that capital back into the deal, right? And suddenly it's like, oh, now it actually makes sense. We raise some more money, we increase the rents, and suddenly, in a year or two, our cash on cash return will rise, 8, 9, 10%. So what is you just have to be creative. You have to see what can you do to make this a better deal than it currently is, right? But don't buy something that won't work out of the gate, because if your strategy fails, then you're in trouble, right? That makes sense.
Yeah, when you're playing with other people's money, I mean, it's you have to be super cautious about, underwriting and, like the business plan and all those things. So is it the C property that you're buying, the 127 units?
Yeah, so it's I haven't been on site yet. I'm going next week, but it's probably a C plus in probably a B market, and that's kind of my bread and butter. I mean, I really like the B areas just because you have, you want to be the cheaper property in the nicer area versus the expensive property in the bad area, right? So
yeah. Because you mentioned the 5K per unit price, so I just assumed it's a C property. So is it in New Mexico or Colorado? Which one?
Well, so that's the interesting part, right? You were asking kind of about markets, and my personal market is, I am in Colorado. I've invested mostly in New Mexico, Albuquerque, because that's the closest, biggest city to where I'm at.
Yep.
But this is actually it's in Pennsylvania. It's actually up in northwestern Pennsylvania. And then you'd be like, why would I invest there? Well, a couple of things, right? It's a stable market. It's a smaller market, but it's super stable cash flow market. It's a tertiary market. It hasn't really seen any big increases or dips in many years. This means that we can go in and buy properties at a good value, good cap rate off the bat, right? And my partner up there, he's there, boots on the ground. He already owns, I think, 700 units that he's built a portfolio. Mm-hmm. So he's there, he knows the market, and he feels, there's no competition from a bunch of new construction coming in. So we just take an existing asset in a stable market, we put some money into it, we improve it, and it's just going to be kind of a steady cash flowing deal. It won't appreciate very quickly, but throw off good returns. We did a deal there last year, 205 units in that same market, and it's done really well. So we feel like, hey, we'll continue to invest in that. That being said, I've also done a deal in Phoenix. This is a totally different market, right? But it's a little bit more, I would say we're, speculating that the growth and demand is going to continue to be there, because that needs a little bit more help. It's not just kind of a stable asset, right?
So what are you looking in the market before you're making these investment decisions?
Yeah, so again, either two things, right? Is this a stable cash flow market that we can go in and just operate a deal the way it is? Or is it an appreciating market where we can kind of ride the wave of appreciation and demographic shifts, right? So again, Phoenix, like one of the fastest growing metros in the country. We've seen people from California move there, people from all kinds of places, and companies moving in. There's a lot of momentum there. We feel like that momentum has a few more years to grow, and so we just kind of riding that wave. But also, we've also seen prices go up like crazy. So we were lucky or able to get a good deal there. So I like those markets, but I don't want to put all my money or my investors' money into something that's a little bit more speculative. And then you've seen the Dallas, Fort Worth been another growing market, Atlanta, and so forth, right? So we have some deals in those areas. But then also, hey, if you're looking for a little bit longer term, 7 years, you just want to put your money there and they'll just kind of grow not as quickly. We like those like tertiary kind of just cash flowing markets, right? Especially in the Midwest, because it's just, it's just cash flow, and that works great for people as well, right? So
yeah.
that makes sense.
Definitely, that's why, again, a lot of people love multifamily business, and I always see a lot of people getting involved into multifamily business. It's because of that simple reason. I mean, it provides passive income. It provides the cash flow. You're buying a business. You're not buying a single family home, and you're not dependent on that one tenant, with that one person or a family who knows what's going to happen again in a downturn, because you have to position ahead and kind of a thing like what's going to happen. Now times are good, but again, you just have to be cautious and make the decisions, like when it comes to underwriting, like worst case scenario most of the time, I guess.
Absolutely.
So for the people again who are watching this and thinking like, Martin, you're just talking about how should I invest passively? Okay, let's touch something, from an active standpoint. Again, a lot of brand new people, and I see a lot of people offering the mentorships and, like education from an educational standpoint. So should somebody go and get a mentor, like from a get-go, if they're looking to start the business?
You're talking mostly as an active or as a passive investor then?
From an active standpoint, if I'm looking,
okay.
in the business, but I have no clue what I'm doing.
Yeah, I mean, so the way I did it, right, and I can speak from personal experience. I mean, I bought a couple of smaller properties by myself, and I had some local mentors, just, a buddy who had done it, a broker. That was not a formal relationship in the sense that I was paying them for coaching. I was like, hey, what do you think about this deal? I'm going underwriting, and we decide, yeah, that looks good. But I was only putting my own money at risk there, right? Maybe an investor and stuff. So that worked out. I learned some things along the way and stuff. But then I was like, I want to go. When I first learned about syndication, I was like, that's what I want to do. It was like, no question asked. But I also realized I'm taking on so much more risk. I'm taking on people's money. I need to know what I'm doing. I need to surround myself with people that are involved in, have done these things, can guide me, can give me feedback, can help me underwrite and stuff. So I did join a coaching mentorship program. It's been 2.5, 3 years ago now. And it's really escalated. I've really accelerated my growth to another level. Yeah, there's money involved, but hey, anything that's worth, it's really not, don't look at the price, the cost for it. Look at the benefit, look at the value you get out of it, right? So it's not, you really have to think about that. And then just going to events and surrounding myself with people that have done what I want to do, like up level your thinking, that thing about you're the average of the 5 people you hang out with and so forth, right? That's a common one. Yeah. And if you surround yourself with people that have done syndications, that have owned, hundreds of units, you either have 2 choices. You either try to up level to their level or you get out, right? And either way, you will change your mindset and say, hey, this is for me. I'm going to do whatever it takes to get there. Or it's like, well, this is not something I have the ability to do, so I'm going to get out, right? And I felt like, hey, let me work with these people. Let me learn from them. Let me just grow with them. And it's been a really great path forward. So I guess long story short, if you want to be active, find yourself a mentor or a coach and stuff like that. And I've moved into that. I do actually do some coaching too for newer investors that want to get into it, either buying their own stuff, do their syndications, because I'm really passionate about it. And I feel like I've learned enough to help people just get organized and hold them accountable and so forth. So that's another really exciting path or part of my business now, to help people do that.
Yeah, definitely agree. Because I mean, education is everything in this business, and like surrounding yourself with the right people. Definitely great advice. I mean, this one is definitely, you cannot skip it. I mean, coming back to free content, there's a lot of that, available, podcast, YouTube videos, blog posts, you name it. I mean, there's stuff out there that you can grab for free. But if you want to go further, faster, I mean, mentorships is definitely one ways to go. So like for you personally, coming back to your position, because again, where you were an employee, you're working for this company, you're doing great, but they don't teach you anything about business mindset and how to underwrite, raise capital for deals. I mean, it's you just do day-to-day tasks. They're kind of boring, same stuff, routine. So like, how long did it took for you to pull the trigger and say like, listen, like I'm going, like I'm stepping in on this thing?
Yeah, I mean, and I actually do still have a W-2 job that I'm trying to get out of this summer. So I am doing both things right now, but I'm getting very close. So, um, but you're right about the thing. Nobody teaches you how to run your own business or how to raise capital or do on those things, right? So that is again, looking, kind of like success leaves clues, right? Somebody else has already done that. You just talk to people and say, okay, what was your path, right? What did you do to get there? And everybody's done it very differently, right? Some have just built their own portfolio. That was enough. Other people went straight into syndications. You got to feel like what rings true to you, right? And what team can you join? Because this is a team sport, and these syndications I've been involved in, that's not me going out and doing it myself, right? This is a part of a team, and I had a small role in some of these initial syndications, and now my role is growing because I've learned more. My skill level is increasing, right? So it's just a slow adding value, right? And then I, be the next deal, the next couple of deals, I will be kind of the key sponsor on it and stuff like that, right? So it's just a matter of growing into it slowly and adding value. A lot of people say, how can I get into it? It's like, well, figure out what is your unique skill set. We always have something we're good at. And usually the thing we're good at is the thing that comes most naturally to us, right? I'm a very organized person who can make project plans and make sure all the details are taken care of. I don't really think about it, but it's just how I operate. And I'm like, hey, and I've seen other people are much more like the big thinkers, the ideas. I say, that's great. Tell me what you want to do and I'll help you do it, type thing. Right? So that's how we can add value. It's like, what is our unique skill set and how can we help somebody else complement their skills? So that's what I really find.
That's very good. That's very good advice. Actually, I never heard that before because, I guess a lot of people, I'm just guessing, but maybe I'm right. Who knows? You guys tell me in the comments if I'm right or not. But I think a lot of people are just stepping on the things that they're not good at instead of following the whatever that is, a gut feeling, intuition. The thing is like, maybe like, I know I'm going to be good at that thing. And you just stick on that because, again, like syndication is a team sport, right? So if you just know what you're good at and you find the people that, will fill in the gaps that you're not good at, you don't have to be the best in everything. I mean, this is, a team sport. If you want to buy houses, you can do that by yourself perfectly fine. But, that's what it is. I love that advice. I love that you said that. So again, personal development, I know the mindset, everything. I just love that. And again, I love the story. I love that you shared like going through that. I mean, you traveled like from your home country, London, like here. So, I mean, there's a lot happening in that time frame that we probably won't be able to discuss. It's just not enough time available in our hands. But, again, like personal development throughout that time, that's what I'm thinking. When I'm thinking about you moving to like through that time frame, I'm thinking like, because I'm looking at you right now and people seeing you as a, successful enough, real estate guy who's having all these deals right now. And like, what was involved into that time frame? Because I know like one of the parts is the books. So we mentioned the mentor. So maybe you can recommend 3 business or personal development books for people to go and grab from Amazon or somewhere, bookstores.
Yeah, so I think, and I really appreciate you getting into that because for many years I was just like, personal development is like, that's foo-foo and whatever, let's not go there. But I've totally changed my tune on that in the last few years, right? So you have to, the most important thing you have really is your own capability and your mindset to go out and make things happen in the world, right?
Yeah.
If you don't have that, you really don't have anything. So I felt like when I started this journey, I was like, okay, I need to change who I am. I need to become this. I need to become somebody. I need to develop and become a new person. And really the most exciting thing about this journey is just developing myself, right? So some books around self-development specifically, I really like the Miracle Morning, Cal Elroy. I don't know if you heard about that one.
Yeah.
Because, and I've adopted that probably the last 3 years, get up early in the morning and just spend some time thinking about, not myself, but my development and who can I help today, and what am I grateful for, and what do I need to achieve today, tomorrow, this week. Just start the day in that manner. You know, I used to be the guy to roll out of bed, grab a cup of coffee, and go to work. Now I have, you know, I'm up at 5 a.m. and I spend some time quietly, nobody bothering me, and really, really work on that, because I think that sets the tone for the whole day. So that's a great thing, you know, just to start the day out right. So
early bird gets the worm. That's what they say.
That's
I don't
right.
know who says that, but that's what they say. So what would be the other books? Because I know people mentioning, like, real estate guys, they almost always mentioning the Rich Dad Poor Dad. So, you know, maybe we can skip that one, and like, what would be the other two books, you know, maybe mindset or real estate investing that you would
Yes, I mean, from a mindset standpoint, the other one is The Success Principles by Jack Canfield.
Jack Canfield. Got
it. The Success Principles. And I'm actually getting certified to be a Success Principle coach too, because that's a lot about mindset as well, which is just, hey, take responsibility for your life.
Yeah.
Right? Anything that happens to you or you want to make happen in the world, that is up to you. It's not the economy, it's not the weather, it's not the government. Yeah. It is you, right? So I really just personal responsibility is just huge for me. So Jack Canfield, Success Principles, that's another hugely influential book for me. And then I think on a business standpoint, because I'm kind of it's not really specifically real estate, but it is around how to create a successful business. It's the E-Myth by Michael Gerber. You know that one?
Yeah, I heard about it. I never read it, but I heard it.
Yeah, and just because I like systems, right? We don't want to every day, it's like, oh, I'm doing a syndication. How do I do this? Well, you've done 3 before. You should probably know how to do it now. Yeah. So I have created and it's something I'll be happy to share with your listeners and viewers. I've created a syndication checklist. Okay. It really goes through all the different steps you should consider when you're doing a syndication. Or even if you're a passive investor, you can look through this and say, oh my God, there's 70 things on this list that you need to do. And maybe you can use it to ask your operator, well, how did you do X, right? And give you, so we can share this, we can share that with your listeners. That
is awesome. Thank you very much. I told you this man is a go-giver. So definitely, you know, thank you for that. I love that you said about the Jack Canfield and pursuing that. I mean, it just, you know, clarifies that you're here to provide the value for people. You're looking to improve your personal self, and that way you're going to give back, you know, contribute to society. I mean, and through real estate investing, because at the end of the day, that's just a vehicle to help other people, maybe who have, you know, the capital to invest, and just to make sure that we help to reach those people's goals. So that's what it is. It's just a vehicle for, you know, to help each other. So that is awesome. I love it. So maybe you can share some of your, again, you mentioned, you know, going for the Jack Canfield's course, and, you know, personal or business goals that you're looking to accomplish this year. Can you share some of that?
Yeah, absolutely. So I mentioned before, I still have a W-2 job. So goal number 1 is to exit that, right? You know, that's definitely goal number 1. Number 2 is, you know, we are doing, you know, continue to do syndications. We got 1 deal on the contract. So I want to do, you know, 3 or 4 more deals. I can't really control how many, but really building that team and getting a bigger piece of the syndications we're doing, you know, just grow my influence on that. You know, and then the other one, kind of the third one is, so I do, you know, as I mentioned, I do some coaching, and I have students that I want to help them grow and take more action. So a lot of people, like, you know, the duplex, the fourplex, they say, no, let's not go there. You go out and you connect with the brokers, you underwrite the deals. And if you find a deal that matches our criteria, we'll help you syndicate it. So really my goal is to help, you know, 2 or 3 of my students to take down a 50, 100 unit deal by co-sponsoring with them, or actually, you know, bringing experience, bringing some net worth, bringing some due diligence money to it. So just helping other people be successful, right? Because if we can achieve success through and with other people, we just escalate and we just multiply our impact on the world and each other, right? So that's kind of my other one, right? So that's kind of 3 things, you know, growing my coaching practice too, because that's something I really like. So those are the major things I'm working on this year.
Love it, love it. That's that will be a great closing here. I mean, for the show, but I have another question that I wanted to ask you. But I just love that because again, just helping other people out. I mean, that's what it is. Because at the end of the day, like, I know it's a business, like money, and everybody wants to get paid. But at the end of the day, when everybody is gone, like the deals are gone, because they will be gone at some point. They're bricks, and that's all it's gonna, like, So, but people, when people are gonna be around, generations from now, they're going to remember the events that took place, the people that somebody helped, and like all those memories that they're still going to live on. So I love that impacting people in that way as well. So for that reason, if people want to get in contact with you and just ask some again, questions about real estate investing, active, passive, maybe they are looking to be one of your coaching people that would like to get some deals done, what will be social platforms that they can get in contact with you?
Yeah, so I'm, excuse me. I think the best way to reach out to me is just through my email. That's Jens, Jens, at opendoorscapital.com. So that's open doors with an S, capital.com, my website. And I also love to just give back by offering people a free call, so they can go to my website, opendoorscapital.com/call. And they can schedule a 20-minute free call with me. So I offer that up as kind of like my way to give back to people. So we can talk real estate, we can talk coaching, and talk anything like that. I'm not, this is probably something I'm not super active on. I mean, obviously my LinkedIn is, you can find me on LinkedIn there. Open Capital. Not super active on events of other social media. That's kind of one of the things I'm lacking on a little.
That's no worries. We're going to provide, again, guys, as always, click the links down below for the email and for LinkedIn. Again, we connected through the Facebook. So Facebook is there. You can get in contact with Jens through there as well. And, just ask a bunch of questions. Make sure you do your due diligence. Don't come up and ask, because this, again, the doors are still open, for this man, because he's, willing to help the people, but he's getting busier and busier with the things. So make sure that you're, you're ready to go before you come in and talk with this man. So I just really appreciate the time and the effort and the knowledge. And I love the story. The story is not finishing here. I mean, it continues for you. So I wish you just the best of luck this year. I'm sure you're going to accomplish all the things that you planned out and more. Again, because you're a just great guy, has a great vibe, great attitude, and just looking to help other people along the way. So for those type of people, things just always works out. So again, just big thank you for being, on the show. Really appreciate it.
Oh, thank you, Martin. It was great. I really appreciated that. It was so much fun.
Thank you. And again, for the guys, if you enjoyed the show as well as I did, and I hope Jens did, click the like, subscribe to the channel, share it with your friends so other people can learn at the same time as well, the mindset, what it takes to invest in real estate and how to be successful in it. Again, get in contact with Jens and all the links down below. And I will see you on the next episode. Thank you.